Hello traders, Day Trader Matt here of businesswithtrading.com, and I wanted to highlight last week a day that was not our typical day. It was a very nice day. We had some excellent trades, and let's get into it. So our methodology, we use price action, and despite what a lot of YouTube videos and so-called gurus will tell you, price action has nothing to do with candlestick trading. Looking for like three blind crows and the mice eating the cheese, whatever they are. That's not what price action is. Moving averages, watching the stochastic MACD, those are all lagging indicators. They have nothing to do with price action. Price action is knowing what order flow is. Price action is knowing that the market's weak here, you want to short. Price action is knowing that the market is bottoming, or at least giving that illusion of bottoming, because nothing is 100% in trading. You might look for a setup and maybe 70% of the time it works out, and then 30% of the time you get stopped out. That's why you keep your stops small. We trade with a 2-point to 1-point stop. 2-point maximum is our stop, and if we can get a 1-point, that's like someone giving us a gift. It's really nice. But anyway, this day, if you count these trades, one contract to here, one contract down into this region, we actually got out here. I forgot to put that on the chart, but anyway, we got out here. One contract from here to here, one contract from here to here. We actually got out here. It would be unfair to count any of this because our room closes at 12, and this was a really good level that we were watching during this breakdown. So one contract, all of this, that's one trade, two trade, three trade, four trade. So that would be 4 contracts, 39 points. That's crazy. We usually look for something like that in a week, and that's pretty good. But in a day, that's absolutely fantastic. And when the market is actually moving, so the high, we'll call it 421, 42.21, and the low, we're not going to look at any of this or here, so we're going to take this as a low, 42.03. That is a lot of movement. Whenever the S&P is over 15 points, that's really nice, and that's one thing we like to look at. So when the market opened, we identified this level prior, did support, and it did push up. We could have taken this trade, but it was literally a minute after the market had opened. We wanted just to watch it. Price comes up, and we identified this, came up, started to sell off a little bit, little congestion, sold off a little bit more, and we were really watching that 42.0250 level. I guess that's a tongue twister for me. So we were really watching that level, as if price breaks it, we're gonna look for something worse. So we ended up getting long at this 42.04, which was a nice area, and 42.04 to 42.0250 is 1.5, and so if it broke down below that, it would hit our 2-point stop. We would be out. Obviously the market would be doing something differently. It worked out in our favor. The market did start to push up, and we held looking for price to come up a little bit above this. It actually came up to here, which was pretty nice. We weren't looking for it to come quite that far, but we were holding, just moving up our stop as price went. We got out over here, and then as price came down and popped back up, we decided to get shorts. And as price broke down below this, we were looking for a retest, which usually happens. Price came down, came back up, retested it, but it didn't quite get to the area, and then it started to sell off, which kind of gave us a clue that it was going to sell off a little more. than we initially thought. As it came down and started to congest, we ended up getting out right here. Because it came down and started congesting, we can always get back into the trade. You can't always get out in the past, or you never can. So let's say, for example, price came down here. This is what we were initially looking for. This would have been the next area that we were looking for. Price starts to consolidate. It's better to get out, because if price did start to push up, then you'd still be able to get out at a profit, but not as much of a profit. Now, in this scenario, price actually moved down. Did we care about that? We did, because this is a potential area that it could support. This is also a potential support area. But because this bought up, we were not looking at this. If price would have pushed below this, we would have not gotten long here. In the majority of cases, price would have had to really show something for us to want to get long here. But anyway, price was pretty lethargic during this time, and that's why we had so many oscillations. So anyway, price did sell off, and as it did sell off, this was a perfect area to get long. So we got long. Chopped around for a couple minutes and then just shot up. As it moved higher, you did see some rejection here, and price did come down, and it immediately moved back higher and rejected a couple more times, and then it started to take off. So as it took off, we just watched price, got out right over here on this candle. Price came down, came back up, and as it came back up, we decided to get short. We saw this rejection here. This was our area. If you could draw like a box between these two lines, I would have drawn a box, but that's not what I do during the day. The boxes are what I do at night and on the weekends, just to show zones that I'm looking at. But anyway, this would be a zone. So we got short here. Price did start to sell off, and as it sold off, it did sell under this. It did come back up, but then it rolled right back over. So these are minute candles. So in 3 minutes, it went from our short entry to below this area of support resistance, and then it kept going. It was very nice. This was at 11:57 Eastern Time, and it was a perfect level to get out. Now, I did talk about holding and just keeping a stop up here and just watching as price came down, and we did have a couple areas that we were looking at. So as price did drop, it came down, and this level were areas that we were watching. It broke right through this. This wasn't a huge level, but it is a level. But anyway, it was very nice. So we got out here. That's what we count as our stats. But if you did hold on, then it was even better. So this was a perfect day. Definitely not typical results, but it's a day where you just add on to what you've made. So you made 10 points one day, 8 points another day, 12 points another day, and then you have this day where you make nearly 40 points on one contract. So if you're trading 2 contracts, you're making much more than that. If you're trading 4 contracts, you're making a lot more than that. So, and that's our system, really. If you can trade well, we trade 2 contracts in the room, but for results today, I didn't want to go over we trade 2 contracts and get out here and get out there. That's a little complicated. I wanted to simplify it. And when you get days like this, it's just something to be really, really proud of. I saw something posted where somebody shorted here and they wrote it down a little bit. You have different types of traders, but the way I look at it, you have the professional trader who doesn't look for confirmation, and that's something that we do. We don't trade on confirmation. That's not what price action is about. People have tried to turn it into that, and that's not what it's about. Like getting long here was not confirmation based. Confirmation based would be, let's get long here. If it breaks this high, that's something you could do. Sometimes it works out, and a lot of times it doesn't work out. Like here, for example, price came down. It did break this high, and then it did come up, and then it went back down. So sometimes it works out, sometimes it doesn't. And that's why we don't trade with confirmation. We trade 100% price action. We got long here. This was an area here. The area we were looking for as a line in the sand was 0250. So 1.5 points above that, we're good. If price comes down and hits it and moves up, we're good because we're half a point below that. Very, very rare in that instance the price would come down and hit our stop and take off. It's not highly probable. The higher probability was it holds here, it hits it and takes off, or it breaks it and keeps going down. That was the higher probability, and we got it held above and took off. And price being a little bit lethargic kind of gave us a little bit of a bias towards, let's just get long, let's not wait. And then it just, gave us our nice trades for the entire day. Anyway, hopefully you enjoyed today's video. You got something out of it. If you did, feel free to comment below. We do trades like this every day. Again, today's not a typical day because we made so much. A more typical day would be somewhere between 8 to 12 points. That's kind of what we're looking for. Today is more like a few days in a row. So anyway, hopefully you enjoyed it. You got something out of it. Links in the description if you want to check out more. With that, have a great day. I'll see you in the markets. Take care.